Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and the Bitcoin market. Bitcoin, the asset, that is what we talk about on days like today. Happy 100K day. Loaded up for discussion today. We will be talking about the coin called Bitcoin. Bitcoin has passed $100,000. Congratulations to all Bitcoin holders. We also have a couple of other things to talk about today. We've got ETH NFTs continuing to soar. Bored Apes are up 10% to 22 ETH. Penguins are up 7% to 15.7 ETH. The NFT season is upon us. We've also got from one brilliant end of the spectrum to the most diabolical. We're going to touch very briefly on Hawktua's Hawk token pumping and dumping immediately, but we are not going to spend too much time on the negative stuff today because we've got so much good stuff to chat about. We'll also be talking about general price action on NFTs and strategies and market rotations and where liquidity is flowing. Got Sam with me to do that. Can't wait to get into it. But just a reminder, friends, even on days like today, where it will appear that everything that we say is right because we have been right in our convictions up to this point, we still do not offer financial advice because we ultimately do not know anything for sure. So please keep that in mind at all times. Sam, it's Thursday. It's the 5th of December. Happy 100K day. How are you doing? How are you feeling?
Happy 100K day. I didn't think this six-figure Bitcoin would ever come. I genuinely thought this would hit like 99.9K and just go back down. But yeah, it's interesting to see, and I'm intrigued to see how high it goes, and then when that stops and the Bitcoin dominance switches, how hard the alts will run. And whether it kind of repeats from the last cycle, whether it's a completely different market dynamic. So there's a lot to observe and obviously react accordingly.
Yeah, I completely agree. Definitely, I think one of the things we want to do today is just talk about what are we doing as a consequence of this, how are we feeling, how are we positioning ourselves, and what other directions is our attention and capital moving. I saw Funky on stage with us for a second. I wanted to go to him. Just going to invite him back. He's obviously our resident Bitcoin expert. Would love to hear his reflections just before we get going today. Funky, I've just invited you to speak if you can accept. In the meantime, we've also got Stats with us up on stage. Stats, happy 100K day. How are you doing? How are you feeling, my friend?
I'm feeling all right, man. Got up early just to celebrate. I'm waiting for my medal in the mail.
Is what color medal is it?
I don't know. After the ETF was approved, I felt the same way. It was like everyone's celebrating on crypto Twitter, and there was like this feeling that everyone was going to get something like in the mail, like we just won some award, and then kind of life goes on. So.
Yeah, I know exactly what you mean. It's like we're all here congratulating ourselves, and I thought it was actually you, Sam. I don't know if you can tell me otherwise. I was looking for a tweet or a poll that someone put out. Like everyone's congratulating themselves on 100K days. Like, does anyone actually own any Bitcoin, or has everyone just been doing meme?
Well, Zeneca put that poll out, and
Zeneca.
It was like no one owned Bitcoin, and I actually did just retweet that exact same poll.
I like it. Oh, I think you just dropped down, Sam. I think you maybe disconnected. I'll invite you back up. I'm just going to bring that poll up because I thought it was an interesting one for people to see. But Funky, we've got you up on stage, our resident Bitcoin expert. How are you doing? How are you feeling, my friend?
I'm feeling amazing. I don't know if you saw the little video I recorded that was like 3 seconds long, big Bitcoin energy. I actually answered Zeneca's poll. I was very happy to admit that I forget how big the band was, but I was like in that 30% plus of the portfolio equation. So I am obviously a Bitcoin holder. I will continue to stack. If we get the Bitcoin strategic reserve and we start seeing nation state FOMO, I will never sell a single set. I will just continue to accumulate like Michael Saylor.
Like it. That is, look, I actually completely agree with you, Funky, but I was just telling Sam pre-show, one of the things I was reflecting on is it doesn't feel as good buying here, does it? Like the plan, as we've discussed before, was to, keep taking the profits from other things, obviously cover taxes, keep some in stables, make sure your life's sorted in that respect. And then, the plan had been, just keep buying a little bit of Bitcoin, keep buying a little bit with each of your wins, or that's what it was for me anyway. And it just doesn't feel as good, but need to get back to the plan from my perspective. I brought up that poll that Stats just mentioned. We've got Zeneca asking the question, what percentage of your crypto portfolio is currently in Bitcoin? The options were more than 70%, 30 to 70, 10 to 30, and less than 10. Seems like 50% of people have less than 10, 16.2%, 10 to 30, 30 to 70% was 20%, and more than 70% was a pretty small, a relatively small minority at 15%. So interesting to see that. Sam, you wanted to come in?
Oh yeah, sorry. I refreshed the page and then dropped off. But yeah, no, it is kind of wild that nobody actually is in Bitcoin. I've also never seen crypto Twitter get so excited about a 5% move. Like that's a total boomer move. I actually have, to be honest, for me, I still have most of my money not in crypto. So I have really been building my Bitcoin position because it's just so easy to buy IBIT. It's easier to report taxes. It's easier to keep it all above board. Like the ETFs really have moved the needle for me. It's the first thing that's gotten me to get my family into crypto. My dad started buying IBIT as well. So I am an example of a place where the ETF has actually led to more inflows into the space. So for me, it has actually kind of been a pretty big position at this point. But yeah, for the rest of the space, it's like a boomer position, and where we sold it all to buy the Haktua coin,
and then we're all down, and then that's why no one has any Bitcoin. So look, I think that's really, really interesting. And one of the reflections when you're sharing that story is I always think now, instead of like looking for signals elsewhere, I'm far more confident in looking into myself or into my family or into my own personal interactions with people for the signal. So it's like, look, if in practice you're someone that's fairly sophisticated in the space and other people around, and you're noticing that and you're bringing other people in that way, I think it's a significant movement.
Well, I think, we see things not as they are, but as we are. And I think that, when most of our opinions are formed from our own experience, and, we have a lot more insight into our own experience than 100 other people put together. So, I think that is always a good place. You always have to be careful that you're not projecting your own experience on the whole world, because we all are unique and have unique circumstances. But the vast majority of the things that I post, think, et cetera, are based on kind of things that I've experienced myself. So I think that's pretty normal.
Agree. Counterpoint, Sam, we take our experience and we like Bitcoin and we go out and project it onto the world so that they all continue to buy our bags. That is an alternative way to go about it. Sam, final reflection here. We're going to talk more about Bitcoin. Obviously, there were actually some specific Bitcoin bits of news that I wanted to pick out and share with people a little bit later in the show, but we'll do the quick roundup and stuff first. Sam, any final reflections before we get there? That's Sammy rather than Sam. Got two Sams on the show. Always love it.
It's getting confusing again.
Yeah,
it's interesting. Like I was looking at the ETF flows because the other Sam mentioned them just then. I think it's been about 1.5 billion of inflows into Bitcoin, but also 600 million of inflows into ETH ETFs. And there's been a bit of a rally recently. And there's been that discussion around, okay, well, Bitcoin's past 6 figures. So should ETH start to run? It's still below 2021 all-time high. So it'd be interesting to see what happens there. And also just from like a traditional finance perspective, I've got a lot of friends that are in banking. They're now messaging me being like, hey mate, how's the pump? It's like, well, you're a bit late, but yeah, I've been telling you for the past like 3 years, 4 years, but yeah, welcome. So they're now asking for advice. So that's super interesting.
Yeah, we did think, I think we said this some time ago, 100K is just a very, very important psychological level. So look, let's get into the news. You mentioned the ETH ETFs there. I've got some statistics there to share as well, which I think will be interesting to people. But let's do the general snapshot news as always, coming from the snapshot, which is pinned up top if you're listening on the Twitter Spaces. But remember, we're live on video, on X video, and on YouTube video as well. Starting with the price action, we've got Bitcoin up 7%, looking comfy at $102,800. Got ETH up 6% as well, though, knocking on the door of 4K. It's at 3.9K at the moment. Solana's up almost 5% as well to $240. Just on the meme coin side of things to see how things are responding over there. Got Dogecoin up 10% to around 44 cents. Pepe's up 7%. WIF's actually flat. Bonk's up a couple of percent. Popcat is flat down at 140. Peanut is up 6. What else do we have here? We've got SPX up 10. Murad's one of his favorite coins. Giga was obviously listed by, I think it was Coinbase yesterday or the day before. That's up another 30%. So a little bit of a mixture there. Not one unanimous move for memes. Seems a bit split, mostly green, I would say. Getting into the headlines themselves, we have Bitcoin ripping past 100K. Obviously, there's a few bits of news I'm going to pick out when we dive into that in a little bit. Huck Tua's token pumped and dumped immediately yesterday. The community notes on the posts were fairly comedic. It said 96% of the token supply has been sniped and is slowly being sold on the community. Buying this highly speculative token might result in loss, and high due diligence is recommended. So no one saw that coming, but it happened anyway. And then finally, ETH NFTs continues to soar. Bored Apes plus 10% to 22 ETH. Penguins plus 7% to 15.7 ETH. When ETH is moving in the way that it does, it's just so hard to keep in mind how valuable these NFTs are becoming. Like with ETH almost at the door of 4K, if you look at the price of these things now, I mean, Bored Apes pushing 80K, looks like, well on the way to 100 grand. Pudgy Penguins now up to almost 60K. These are assets. I mean, I bought my Pudgy Penguin at it was $32,000 because I didn't use all ETH. I used a little bit of dollars as well. So I was like making sure I knew the dollar number because I didn't want to use all of ETH. So it's like a 2x in dollar value, at least, in not a long time. But yeah, the NFT moves when ETH is moving as well is just something to behold. Pretty powerful. Getting into some other bits of news from around the space, we also had some other big sales. Fidenzas have really run. Tyler Hobbs Fidenzas have kind of run aggressively. More sales taking place in the 50 ETH region now. They were as low as 30 ETH during the kind of bear market. Jack Butcher Opepen set 1. Sold for 32 ETH. That's a pretty prominent one, showing that one on screen. And then some news from around the space. Magic Eden eligibility checker announced. A lot of people were complaining on this, criticism on the lack of eligibility and mobile wallet sign-up requirements. I think people were a bit annoyed they might not have got as much as they want. I kind of take the other side of this sometimes, where everyone just complains because it's never enough. Although I don't know if the process has been that smooth. Be interested to hear your thoughts on that, Sam, in a bit. I haven't actually checked mine yet. On other news, Meteora airdrops a token called Meme, spelled M3M3. So if you've provided liquidity there, or I think if you had a Bodogo or maybe some other NFTs, you might check your Phantom wallets or any Solana wallet you have to see what you've been dropped there. I had a small amount dropped. Crossmint reveals library to assist agents interact with apps and perform on-chain actions. That's interesting on the AI side. A16Z shared some big ideas for crypto for 2025. Lots to do with autonomous chatbots and AI and things of that nature, as well as a few other things. And then we've got some artistic stuff. Jack Butcher reveals sculptural pieces entirely handmade by Asprey Studio. We've got the Sotheby's VP launching another meme coin called Void. I think the previous one was that ban one, the banana one that went to like 60 mil, which is pretty outrageously profitable for a lot of people. And that is the news from around the space. So Sam, before we get into the main headlines today, we're going to be talking Bitcoin and NFTs, I think primarily. Any bits of news here from around the space that are interesting you too?
Yeah, just clarifying, Sammy. So maybe you say Sammy.
Yes,
so I think the Jack Butcher stuff's interesting because you can see that price action coming through with NFTs. I think it was up a decent amount. Just looking at the Mintify heat map. I think on the A16, I sometimes say AI16Z, but it's A16Z report. I think that to me is interesting because obviously I'm deep in the AI or deep decentralized AI side of things, and the rate of innovation there is pretty solid, and it's changing from week to week. Like even in the past week, some of the top agents by Smart Engagement have dropped off. Some newcomers have come through. So that's something that I'm paying very close attention to. And more recently, I think there's one called God that literally has the God handle on X, and that's now automated. So that is an AI agent behind that particular X handle. and they've got like a research team. So Noose Research, and Schloms is the other account that's kind of looking after that particular AI agent, but that's getting a lot of traction, and I can kind of see the universal appeal. So I'm kind of looking towards these agents, like what are their unique like value propositions? Are they going to dominate within a particular niche within that crypto segment? And what utility are they offering? Because I think some of these personality agents are dropping by the wayside if they're not engaging and they're not entertaining. Whereas you've got these other utility agents that can solve problems that people are attributing value to, and attention is kind of going that way. So just observing that market dynamic is pretty interesting, and how they actually start to do those on-chain interactions. Like I spoke about the Chaos token yesterday in a tweet between AIXBT and Simi. Simi got tricked AIXBT into launching that token through like an on-chain.
These are, just for clarity, these are two AI agents who are interacting with each other autonomously.
Yeah, exactly. So they're engaging with each other and launched a token. So I mean, AI agents have been around for a while, but it's the interactions on chain that are kind of becoming a little bit more, or they're kind of emerging. So I think that intersect with crypto rails is super interesting. I think that could develop at quite a fast rate. And I think that I have not looked at the A16Z report in detail, but I suspect it's alluding to that.
Okay. I like it. And I think we're going to dive into the AI agent stuff when you do the kind of NFT roundup in a little bit. You're going to be sharing some of your AI agent analysis as well, as part of that segment. So looking forward to that in just a little bit. A few more kind of interesting data points that I wanted to share before we get into the Bitcoin conversation with these 3 tweets I've got lined up. So I want to kind of do maybe a quick fire set of data points, which I think are interesting. First one is this one shared by OXNGMI. I think this is the founder of DeFi Llama, actually. I'll just, yeah, building transparent DeFi dashboard, DeFi Llama. Obviously, DeFi Llama is super helpful dashboard for all data points in crypto. First thing is a new all-time high has been reached in stablecoin supply. This is something I guess we've been betting on for quite some time. We've been seeing lots and lots and lots of dollars pouring in to crypto. Whether all of those things immediately are converted into crypto, or whether they're just like minted on chain to be on chain and do stuff on chain, is I think not necessarily a concern of people, because it's just positive that more dollars are coming on chain. So that's something we've noted in the last 24 hours, that new all-time high has been reached in stablecoin supply. The second data point from the same person is that now that we're well into the cycle, it looks like this will be the first cycle where money raised isn't ballooning massively. Has capital shifted from VCs into liquid markets? Sam, this is something you've been looking at a bunch, right? And one of the things we've been discussing on the show has been to what extent you can track where we are in the cycle against VC raises, because typically what has happened is that the more absurdly high the raises become, the further along in the cycle we are getting. And I guess what this data point is suggesting, I'm sharing this graph on the screen as well so people can see, is that we are nowhere near, in terms of the monthly sums raised, to where we were in 2021 and 2022. And there could be other factors relating to that. There could be other relevant factors. But just as a core, as a strict data point, it's significantly lower. So that's another thing. And then maybe I'll stop there, Sam. So those 2 things first, and then there's a different set of data I wanted to discuss. So what do you want to talk about here? Do you want to talk about the VC capital, VC raises not being as high as before? Where's that money gone instead? Or stablecoin supply? What's your thinking here?
Let's go VC. I think that's interesting to me, because I don't know if it's maybe we're a bit too early, and maybe that VC capital might come in a bit later, or whether it's just coming in different forms. So whether they're investing in, like I look at AI agents as an example, like I think businesses are going to be launching these agents for whatever purpose, whether every single industry is going to have an AI agent to a certain extent with crypto rails probably. So I think that there could be angles that maybe aren't captured by this data as well. So there could be VC investment coming in through different angles that we're not capturing, in which case like we could be understating the amount of VC involvement. Like you look at A16Z, like providing grants, or like putting like the reports that they put out recently, it looks like they've got a heavy focus, but I don't think that's necessarily demonstrated by that particular chart that we showed. So I think capturing that, so the completeness of the data, could potentially be one angle, like what's it capturing. But yeah, I think go on.
This is what I'm wondering when I'm wondering why. I'm wondering why towards the end of the cycle, people, maybe this is just human nature, right? When things get very, very bullish, everyone wants to get a slice of the pie and everyone starts to pile in. I would have thought that objectively looking back in that 2021 cycle and seeing how much was raised for particular teams and seeing how that was arguably very, very risky and probably poorly allocated and just too late in the cycle. And if you couple that kind of historical performance when things get very, very frothy with the specific environment now, which is these VC coins just not doing very well. Like I think maybe in 2021, though, like that model was still performing. And so fine, if it's going to be frothy, you can kind of take the risk because you can design the tokenomics in a particular way and still come out with a huge win. And it just feels like now, look, we've looked back at that previous cycle and maybe cycles before that too. I wasn't around for those, but looking back in 2021, okay, you've looked back in those, maybe some of those valuations were pretty crazy. You wouldn't want to do that again. Plus, it genuinely looks like at this, in these next or in the past few months, we're moving away from teams being able to put 10% out in circulating supply, lock your investors up for 12 months and them still be profitable and that token perform well and not just nosedive as soon as it comes out.
Yeah,
so,
I think the market dynamic changed, and I think that whole fair launch stuff that happened like with Pump Fun earlier this year, that kind of demonstrated a new form of launching a particular token, and actually the public can participate in that value capture rather than it being in these phantom markets or private markets. And I do think that like memes, and I've spoken about this before on the show, I do think that memes kind of created this model where we're seeing other industries do that as well. And AI agents as an example, like they're launching now as a fair launch in the market. There could be VCs that are backing those particular agents. And actually later on, you then find out that there's certain AI research teams that haven't been funded for the past like 4 years or something. All of a sudden, they can get capital from a token launch and they can continue development. And they've also got a community of people that are really interested because they have this financial interest in that particular agent. So I definitely think that the model of raising capital has shifted over the past year, and maybe these VCs are doing it in a different way. And that's probably where I was kind of alluding to, like the capture of this VC capital coming into the space maybe isn't being captured in those traditional senses, and hence that chart maybe isn't complete. And that's a very difficult thing to do because they come in a bit more in a way that isn't very easy to track. But I agree with you. I think the market dynamics shifted. So, I mean, we could be full-blown VC capital coming in, but we're just not aware. It comes in different forms.
And not to like completely butt in, but I am curious, and it's probably far too recent to be reflective in the data. But I'm curious what you guys, sorry if there's any like external noise. I'm curious what you guys think about, like, for example, the impact of like hype on the market. Because yeah, you could say, okay, meme coins have been super performant. Sure, a lot of other tokens have been super performant. But if you want to actually stack in a pretty substantial amount of capital, it's fairly difficult with a lot of those tokens. Mm-hmm. So you might still have a reason, or at least route via VC to do so. But then you look at something like hype, and it's like, okay, token goes from non-existing to within the top 20 and 10 billion plus in a week, and you're talking about actual tech, and it was all fair launch distributed. I'm just curious if that has any like resounding effects on the VC market of like, why are we taking this route anyway when we can just look to market, look to market buy and perform vastly better than what we're doing.
Yeah. So, Sam, did you want to go first? Or
no, I think there was someone else that wanted to speak.
Oh, I don't think so. I'll take it. So Eddie, I think I think hype is another great example. So yes, we've seen on the pump fund side, we've seen that like fair launch mechanic be something which has been very popular. That's now bled over into AI agents and like launching legit products in that respect. So I think that is one thing that's happening. But for maybe the bigger products, I think a lot of teams are looking towards hype. I've had I mean, we were talking about this yesterday with Bread as well. I think a lot of teams are looking towards that ecosystem to be like, how can we try to replicate this, right? How can we try to get more of our tokens into people's hands at a higher cost basis potentially as well? Because this is the issue. The core issue with the previous model is that there are too many people whose cost bases are so low that they really don't care when those tokens unlock, that they're just so far up in profit that they will just be able to sell irrespective of their bullishness on the project. The point is their cost basis was so low. And I think one of the other things that's happening simultaneously with this is the Echo platform, which Kobe has created, is trying to allow another layer of investors to come in, maybe either on similar terms to the VCs, or actually I think sometimes even better, but just broadening out the investor base so that there are more people at a particular valuation rather than there just being one group, and then maybe starting a bit lower so that you can build upwards. Like this hype chart, which you've shown, is, I mean, this must be giving people both dreams and nightmares, to be honest. If you were a team building in the space right now, I'm showing this on screen for the people who are watching in. This would give you a dream if this was your protocol. And this is an absolute nightmare if you were to compare with a protocol that's going in the opposite direction. Like, how do you replicate this? How do you replicate this? It's very, very hard. But those are some of my thoughts.
I do wonder as well, like just to your point around, I think you alluded to the fact about community as well in that the statement you just made. And I think that Hyperliquid have obviously airdropped a significant portion to actual users of the protocol. And I think previous airdrops have been fairly small with the VC backing and the allocation they get from those tokenomics. And I think that model has shifted with fair launch, but I think it could be refined further where you actually find the real users and allocate in probably a bit more of an opaque methodology, but you reward those that are organic users. And I think, like, I bang on about AI, but one example would be to analyze the user base and the engagement of your protocol based on certain interactions to filter out those civils and to filter out that kind of stuff. And I know, was it Layer Zero did a pretty good or a pretty thorough job earlier this year. But I think that's shifting as well. So I think that's going to become a lot more advanced, and we'll probably end up seeing better airdrop mechanics where real users of the protocol actually are rewarded for using that protocol, and actually the organic usage gets rewarded really well, and that continues to retain those users, because user acquisition is really expensive. So if protocols can do that really well, then I think that could definitely improve the way these things are done. And Hyperliquid, I think, is a good case study for that, or at least a good initial case study.
Yeah, I agree. Funky, your hand is raised. Maybe a final point on this. We'll circle back to Eddie to see if there's any final thoughts, and then we'll get on to the Bitcoin conversation. Funky.
Yeah, I just had another real quick example of this where I feel having teams that allow the community to get in at VC prices is a major success. So Asymmetry Finance, which is, you can kind of think of this as a lower cap Ethena. They're building a stable coin now. They do a lot of different stuff with liquid staking. They effectively did a public round at the same price point as the first round for the VCs. And they launched at like a 30 million FDV, I think. And the token has already like 4x. And what they did in the process was generate a massive community. There was no unlock. I mean, there was an unlock. It was all just given for people who did that public round. And people just keep buying because they generated a great community. People are really hyped about the products that they're building. And it's a tiny market cap. So people see that they can still get in early and continue to, know that it's going to climb in value in the future as it continues. So just a very similar story.
I like it. I think that opportunity for community to be on a par with VCs has probably been quite helpful. Sam, just checking quickly. Can you hear crazy noise coming out from outside of my window? No? Okay, that's good, because there's like outrageous, like a chainsaw going off in behind me. So just checking you can't hear that. Eddie, just circling back to you on the hyperliquid point. Any final thoughts there on?
No, I mean, I'd like to get to the Bitcoin. I'll just say, like, it is very, very funny to watch the hype airdrop in comparison with the early sentiment pre-Emmy airdrop. So we'll see. Like that to me, especially considering, like, how do I allocate an airdrop properly so it gets in the hands of people that actually should have it, and also makes rich people happy so they buy more. Fascinating stuff. Anyway.
Absolutely. The only other thing, like, I think I shared this the other day on Hyperliquid, is I tend to try to now when things are moving fast, and things have moved so fast with that, I try to just get allocated, like put something in and then try to figure out more after. So I put a little bit in at, I think it was $8, and then I actually watched the podcast yesterday, the full podcast with Jeff and Kevin from the When Shift Happens podcast. I'd highly recommend it if you just want to go and like just learn more, right? Because the unfortunate situation that we're in now in this type of market is that things move so rapidly. If you had thought, let me just take 7 to 10 days to figure out what Hyperliquid is doing, like, you've missed the move from $2 to 13. And so, yeah, doing that research is pretty helpful, and I definitely learned a bunch. It's not just a DEX, it's not just a perp DEX, which is, I guess, what some people might imagine. Also, listen to the conversation yesterday if you're interested with Rect Radio. Mando and Keyboard Monkey were kind of interviewing Flood, who's like this long time crypto trader who is so long Hyperliquid, and it's just interesting to hear that kind of deeper insight from core super users as well. So I'd recommend those two pieces of media if you wanted to learn more on that. Okay, let's get into the Bitcoin stuff, because it is happy Bitcoin 100K day. We've got a few bits of news. Okay, on the surface, Bitcoin's hit 100K, which is brilliant. But there are a few things which I thought were interesting as part of that news, which I'll share with you now. The first one were these comments from Jerome Powell, the Federal Reserve Chair, who said yesterday that Bitcoin is just like gold, only it's virtual, it's digital, it's really a competitor for gold. So obviously crypto Twitter took that information and truly enjoyed it. However, Jason Yanowitz, the founder of Blockworks, was there at the I think it's New York. That comment was at a New York Times Day in real life event, and he was saying, like, it's not quite as significant as what people were suggesting, because what he thought was more interesting was what Citadel CEO Ken Griffin said. This was what they said. The question is, how much has crypto captured the zeitgeist of the world? Why crypto is doing well ties into why people voted for Trump. It may have a future. You have to remember, an intangible asset like this is valued on intangible aspects. It's about community. It's about standing opposed to the power of the state. People take joy in that. The American people want agency of their money, and crypto is part of that. Remember, if you don't know, Citadel CEO Ken Griffin, so he's the CEO of Citadel. They're like a humongous, I think it's a market maker / hedge fund. They were the people behind kind of executing all the trades for Robinhood. I don't know if they still do, or they definitely were doing that. He's also the person, I think, that he bought the document of the US Constitution. Plus, I'm pretty sure he bought a dinosaur pretty recently. I'm going to check those two statistics. I find them to be very interesting, and I want it to be accurate. But Sam, just going to come. In fact, I'll finish the other bits of Bitcoin news. Also coming out on Bitcoin yesterday, there was this clip from President Putin, Russian President Putin, who said, just a clip saying, who can ban Bitcoin? Nobody. People thought that was significant too. We've kind of been speaking about that for some time. On the ETF side, which Stats was talking about earlier, IBIT, which is BlackRock's ETF, is now over $50 billion. This is reported by Eric Balkunas, our favorite ETF reporter from Bloomberg. It's now over $50 billion. It took 228 days to reach this milestone. The next fastest ETF to reach 15 billion was IEFA in 1,329 days. So it's over 5x faster than any ETF ever launched. In his opinion, that is, quote, ridiculous. So the speed with which this ETF has accrued more than $50 billion in assets is really unprecedented, according to that. Sam, I'll stop there for the second. Any thoughts, reflections? Eddie, I see you with your hand raised. We'll come to you in a second. Sammy first, what are your thoughts on these like bits of news and as it relates to the kind of the main headline today of Bitcoin going past 100?
Yeah, I think 2 points, just one on self-sovereignty and then also on the Bitcoin price compared to gold. I think Kobe posted a chart, and it's been a chart that's kind of gone around recently whenever Bitcoin flips a new company or whatever, but I think it's something like Bitcoin's price would be like maybe 900K if it was to achieve the market cap of gold. I don't think that's going to happen soon. I think that's probably going to be maybe even a decade-long journey, because there's quite a lot of money that people's opinions would have to be shifted around this asset class for that to actually happen. So I think that transition might take time, but there's plenty of other variables that would pump the price, and whether that's like allocation from pension funds, and we've seen that with Wisconsin and a few others. So that's something that I'm definitely looking in terms of like capital coming in and where these like trillions of dollars of assets would have to come from for that price to keep going higher. But these structural changes with the ETFs, with the potential for that strategic Bitcoin reserve, is super interesting. But yeah, just on self-sovereignty as well, like it took, for me personally, it took me probably about 2 or 3 years to then shift that mindset to wanting to hold assets myself versus being used to the traditional system. Like within the UK, like you're insured up to 85K. Like if you have a problem with your bank, like you can pretty much get the money back if there's a fraud issue. That's not necessarily the case with this. And I think now my mindset has shifted where I actually get a bit of PTSD going onto an exchange to do whatever on there and try and take it off as quickly as possible, because you see all these announcements of people being frozen out of their Coinbase accounts because they use the VPN, and that's like a flagging system. And we saw that, I think Brian Armstrong retweeted a post recently about that, like tech companies, CEOs being locked out of their US bank accounts for having crypto related assets. And I think that sentiment is shifting, but I think it would also take time for the masses to adopt that mindset as well. So yes, we passed 100K, but I think there's still a lot of lobbying that needs to be done to take us to that next level where it becomes like the status quo or the norm.
Yeah, I think this Bitcoin reserve stuff, I'm going to try and pull up a tweet from this guy who I just discovered in the last couple of weeks, who seems to be the guy who is going around not necessarily lobbying different states, but they seem to be working together to try to get some strategic Bitcoin reserve legislation in place. And the claim is, I haven't seen like the evidence for this, but the claim is publicly that he has a number of them on board. And well, you know, it's not that he's got them on board, but they've worked together because they want to be on board and they want to do this. So I'm just going to try and find those details in a second. Quick point for the listeners, when I was making my claims about Ken Griffin purchases, whether we should take his opinion seriously or not, he did indeed. Citadel's Ken Griffin bought a Stegosaurus for $45 million in a record auction sale, and also bought the copy of the US Constitution for $43.2 million. So his floor price for purchases seems to be around the $40 million region, which is pretty significant. So I think we can take his opinion seriously in this case. Coming to you with some more stats in a second, but Eddie, wanted to bring you into this. You got some thoughts. What are your thoughts on any of this news on Bitcoin and where it's going from here?
Well, so the interesting thing to me was Kobe put out a tweet, I want to say like 4 weeks ago, 5 weeks ago, maybe. Wow, it might have only been like 3 weeks ago. At this point in time, it's
probably like 2 days ago at this point, Eddie.
Yeah, right. But he had a funny post. Well, not funny, but fascinating. And I think he was pretty right. That the hard part, and I think it was around, he tweeted this around like $70-something thousand Bitcoin. He said the hard part was going to be between 80 to 100. Like that was the difficult part. And then once 100 was breached, we were just going to go straight, like things are unlocked. And I think what was interesting about that is like, I'm pretty confident he was right. Like, and I'm pretty confident that had yesterday we not had Jerome Powell, a Putin post, and the Citadel comments, had we not had all three of those at the same time, it would have been fairly difficult to breach the 100K barrier. But like once we did, I think if not for that, we would have actually struggled and continued in that 80 to 90K range. But once we did all that, like that chart is painted, it's different. So I think those news stories may have had like a vastly more impactful result on, I don't know, like on the chart forever, than we might actually be thinking it did, because it breached through whoever the sell walls were at like the 99,500, whatever, whoever those sell walls were, did not have the volume to sustain that off those comments. So that to me was the pretty like remarkable point from yesterday.
Yeah, I like it. I'm just sharing that tweet on the screen, Eddie, because that's what I had included in the snapshot as well today. He'd said the hard road goes from 80K to 100K. The easy road goes from 100K to 250K. The one thing I have thought though is that whilst on some level it's very bullish that all these people are saying these things, I do think that is the case. The question mark, I don't know if it's a question mark necessarily, but a question that has been raised has been about the incredible buying pressure from Saylor. And whilst, yes, there's the sell wall, and yes, I guess people are assuming that lots of people have decided at this point to pile in because all of this bullish stuff is happening. I won't be surprised, like with the amount that Saylor raised or has raised in order to buy Bitcoin is just astronomical. He could probably just do it entirely by himself. And that's the question mark I think people are asking at the moment, which is there any risk attached to so much of this being bought by MicroStrategy in the way that they're doing it? Sammy, do you have any reflections on that? Then we want to talk about this kind of comparison with the gold market cap in a sec.
As is the case with any company, I'd look at the potential solvency. So how they're raising the capital to then deploy into Bitcoin, like the term of how long it takes for them to have to maybe repay the debt, whether there's like conversions to equity at certain points, like the interest expense. They have enough revenue like being generated to cover the interest expense to repay those debts. So I think or at least service those debts. And I think that is something that, I mean, in the traditional world, like you'd expect that to continue. As long as they're doing it in a sensible way, then I guess they can continue sustainably. But I do wonder if, for instance, we hit a bear market and prices go down quite significantly, if there is I don't know if they will ever go down significantly. It might, if these price targets we're hitting, so say we do go to 250K, but there's still like a 40-50% drawdown, like we might be back down to where we are now, like hypothetical numbers. I do wonder if he continues to buy, at what point, like whether there could be like a liquidation price on some of these things. So I know it's a lot lower than it is now, but if he continues to buy at higher prices and also has maybe funds that through debt, then there is that higher interest expense. And that's probably my only concern from a traditional perspective. But without looking at the financial statements and looking at, okay, well, what their debt to equity ratio is and whether there's conversions to equity at certain prices and all this kind of stuff, it's hard to say whether there's like an existential threat. And that would be on their auditors to decide, and kind of reliance on those processes.
Okay. Yeah, it's actually one of the things that's on my list to just dive into a little bit more, along with, there's a couple of things. I want to understand the messaging, the MicroStrategy messaging on yield. It's something that I don't like instinctively. I don't like that they're talking about Bitcoin yield, and that is something I'm looking into. I'm also on the yield topic, but in a different avenue, looking very much at Ethena at the moment. Obviously, Ethena is the synthetic dollar. People might call it a stable coin. It's not literally a stable coin. It is kind of meant to be one-to-one with the dollar because it's a synthetic dollar. The on-chain yield for staked USDE right now has gone through the roof. Like the last few weeks, it's been upwards of 30% if you hold USDE and you stake it. Now, if you stake it, you are kind of locked up in a way that I think if you wanted to unstake it, it takes 7 days. So if there was ever a lack of liquidity for you to turn your staked your USDE back into USDC, you would have a waiting period. But I'm like, I'm watching that very, very closely. The Ethena price, by the way, has gone completely through the roof as well. I just want to show you guys, because this is the kind of thing that you want to see, where it's like a product has got definitively got product market fit. If you look at the price action on the chart, you'll see here, just got it up on screen, basically back, it's almost at $1. It came out at more than $1, kind of at the start of the year, dipped as low as 25 cents and has been on a tear. It's almost been a 4x off the bottom in October back to $1. And I think the TVL now for Ethena is gone back over 4 billion. And I think it might even be approaching 5. So, you know, their addressable market is trying to go after USDC and USDT, right? They want that to be your, you know, quote unquote stable coin, although it's not a stable coin. They want them to be the dollar of your choice. But there's obviously this risk element attached to it, which is not quite the same profile as USDC and USDT. I used to hold a lot of it, and I kind of, in my mind, I de-risked out of it some time ago, and yeah, I'm just trying to understand that a bit better. And
I think there's the opportunity cost, right? Because if you can get ridiculous yields on your stable coins that are pretty much supposed to be a lot lower risk, then is that risk premium, the return you're getting for that risk premium on the synthetic dollar worthwhile?
100%.
And I've seen a number of people message me about that. They're like, okay, well, I'm thinking about doing this. This is really like a high yield, but do you really understand the risks associated with that carry trade and all this kind of stuff? Like, would you rather just stake it? Maybe there's some protocol risk or whatever with this, where you're staking it for your USDT or USDC. But if you're earning, say, 30% on that, like, and there's like a higher rate on the synthetic dollar, is it worthwhile? Is that risk premium worthwhile?
It's a great question. The reason why it's a great question is because I think at this point, well, maybe even for some time in this market, one of the questions everyone needs to decide as part of their capital allocation strategy is, okay, I might want to take this risk, but is this risk going to perform better than just holding Bitcoin? Remember, Bitcoin was ranging between 55 and 70K and is almost a 2x from that. So everyone, by holding the most solid, reliable, admittedly still volatile, but everyone, by holding the most reputable crypto asset, could have 2x'd their dollar value. And so whatever you're holding instead needs to be doing better than that in order to justify holding anything other than Bitcoin. I think I
don't think that's the right analogy, because yes, stuff goes up. That doesn't mean it'll go up in the future, and the risk profile of a stable coin and Bitcoin are just entirely different. I think you have to understand what Ethena is doing. And Ethena, basically, in our marketplace, has always been dollar poor, coin rich. We've always had people who want to get leverage to any asset. I mean, Ethereum, Dogecoin, whatever. I mean, the timeline over the past month has been full of people who wanted leverage to Dogecoin, who want leverage to WIF, who want leverage to Giga. The way they get that is by borrowing US dollars and selling it into those coins. And then, you know, as the markets get bullish, they pay more and more APY, more and more money to borrow US dollars. And Ethena basically is just a ton of money that tries to arbitrage that. I hate the word arbitrage, but basically tries to take advantage of those high APYs that people are paying and convert that all into one token, so you don't have to do it. Like, they're doing it for you. That's what Ethena is. So right now we're in a market where tons of people want leverage. People are willing to pay 15, 20, 30% in APY, which on a daily basis isn't that much money. It accrues over time, but you know, paying 20% APY on one day isn't that big of a deal. So people will pay that to get leverage to a quick trade on WIF or whatever. And Ethena tries to capture that spread. So yes, in a market like this, Ethena TVL is going to go up because there's a bigger spread to capture. In a more boring market where, you know, just no one wants to go 3x long WIF, go 3x long Pepe, whatever, like, people aren't going to be like Athena's going to go down. It's really just kind of like a risk proxy for the amount of leverage people are taking in the market. So I don't think you have to overthink it. Like, that's really just what's happening here. And I think, to, you know, I mean, Sammy's point, like, yes, people can go onto Binance and take advantage of perp spreads. People can go onto Aave and try to seek out, like, is USDC yield higher on Base or on Ethereum mainnet, and do that all themselves, and spend their day doing that. Or you can just do Ethena that does it for you. I think that's the trade-off. But the flip side is, Ethena does have risk that if these funding spreads turn the complete opposite direction, where people are paying more money to get short, Ethena is in a lot of risk. So that's kind of the risk you're taking. I think right now that feels a bit like it's not imminent because the market's in such a bullish mode, but that's more the risk you're taking. But it's really just a proxy for how much leverage people want to take. And I think even with Bitcoin doing well, there's still people in stables. Like, it's just part of asset allocation.
Absolutely. I think that's a nice way to think about it. I guess the question is, in which way do you allocate? Because it's almost like you now need to have, in the same way we used to have a risk profile for like the core crypto assets that you hold, now you've got this option of like your core stable assets. And in what way do you want to allocate your risk? Because even though Aave is something which is pretty very reputable, kind of tried and tested over multiple cycles now, there's still an element of risk attached to that. So I guess people decide to what extent they want to allocate their stables across these various options.
I mean, anytime you're getting a 10% plus return on US dollars, there is risk. Like that, there is clearly a risk that the broader capital allocation global community doesn't want to take. Otherwise, you could borrow treasuries and otherwise you could borrow money at whatever you borrow money for, in Web 2 and arbitrage it into 10-15% returns here. So there's always some risk. And I think that's kind of the game that we're playing, is figuring out how much of that risk you want to take. For the people who actually are boomers like me too, and have some US dollars kind of as part of their crypto allocation.
Yeah, and just to share like a personal perspective on this, I actually have, I don't know if this is crazy for crypto or responsible or irresponsible, I have a reasonable number of stables that I don't put to work. And I think a lot of people in this space get so, I don't know if it's either addicted or just needing to feel like all of their assets are working for them. But I do think personally, there's a value in having a proportion of your stables which are entirely, I mean, arguably there's an argument that even stables are not completely risk off, right? And you want some in an actual bank account, for example, but a portion of stables that are literally just sitting, doing nothing. And that gives me some comfort, and it's part of like the risk management strategy.
Yeah, I mean, the other thing is, in 2021, FTX went bankrupt, Luna went bankrupt. Like, when you talk about 20% yields, if you talk about that on your timeline, people are going to send pictures of Do Kwon. Like, that's just kind of the muscle memory of the space. So I think like there just is a lot of fear around the space of high yields, and a lot of like people laughing about it. Even in these situations where I think the idea of people paying a decent yield for leverage, like, I mean, the risk is gap moves down where the leverage gets wiped out. And I don't think we have time to go over that, but like that's really the risk you're taking, and protocol risk. But I think the whole space does have some PTSD when they look at any yield above, I guess, what treasuries are at. They're like, because people who chase that in 2021 got washed.
Yeah, maybe it's just quite wise. It's like good experience, good stuff that bad stuff to go through at the time. Maybe some wisdom comes from that at some point. Maybe just a final thing I wanted to share with people to get a perspective on where Bitcoin is sitting post this 100K move. Sammy mentioned the chart that Kobe posted, kind of comparing market caps across top assets. I'm showing this on the screen if you're watching in as well. So Bitcoin is now the seventh biggest asset by market cap. It is at 1.9 trillion. Above it, there are 5 companies and an asset. You've got Alphabet at 2.1, Amazon 2.1 trillion, Amazon at 2.2 trillion, Microsoft at 3.2 trillion, Nvidia at 3.5 trillion, Apple at 3.6. Then you've got gold at 17.9 trillion. I don't know how significant it is. Like, I think it's a bit of a, how do you describe it? Like, it's a bit of a superficial thing to say, oh my God, Bitcoin's flipped Saudi Aramco. Like it doesn't, I don't think it means a great deal that you've kind of flipped an oil company. But I think the gold one is the thing that people obviously have their eyes on. And Kobe tweeted this specifically, said Bitcoin is going to be the #1 asset by market cap in existence on planet Earth. It becomes clearer with every asset that it flips. The target is clear. We dethrone gold. He tweeted that yesterday in the evening. Sammy, any reflections here on Bitcoin being the #1 asset? You suggested it might take some time. Would be interesting to hear Stat's opinion on this as well straight after you.
Yeah, I think just to your point about comparing apples to apples, I do think that makes sense for a comparison because that's how people perceive it. I do think that gap's going to take a while to close because you'd have to have boomer mentality moving money out of that class that they've always invested in as an inflation hedge. But I do think that maybe in 3 years, maybe 4 years, like next cycle, we might start seeing ETH on that chart, because that to me is like a programmable money that has that smart contract functionality. That kind of feels more of a right comparison to those tech companies. So potentially we could see that pop up and that comparison start to kind of proliferate a little bit more. But yeah, I do think that Bitcoin is going that way to compare to gold, but I don't think it's going to be there anytime soon. I think it's going to take some time for that to happen.
I think this is the time frame is the interesting part of this now. Stats, what are your thoughts here on Bitcoin catching gold? 1.9 trillion versus 17.9 trillion at the moment. What's your thought?
I just think so much of the bull case, like the case that like back in the day Mike Novogratz would make on panels, and you'd hear people say on conferences, is, well, Bitcoin's kind of becoming the next generation's gold, and gold is worth 20x, 30x what Bitcoin's worth. So it just makes sense to have some allocation of gold. I think it's hard to overstate how powerful of a message that has been to get kind of a more institutional kind of boomer buyer base on board. So, I think that's there. When I saw that all we need is about a 6x to equal gold, I'm like, that's not as exciting as it used to be. If we actually get there, I feel like this whole story kind of loses a bit of its luster. At the same time, the fact that Bitcoin is worth half of what Nvidia is or half of what Apple stock is, it shows that like the allocations still aren't that big. Obviously Apple gets huge portion of every SPY ETF bought, goes into Apple and stuff like that. But the fact that Bitcoin is still lower market cap by like 40% than a lot of these stocks that are widely held, widely known. When people say, Bitcoin already has max allocation, or I saw a tweet this morning about how people who want to be in are in already. That's the kind of comparison that makes me more bullish, is seeing individual stocks still at about 2x the valuation.
Interesting. Very, very interesting stuff. Funky, wanted to maybe throw to you as a final point, resident Bitcoin expert. Both people so far think Sam and Sammy think we're going in that direction. That narrative is very, very powerful. Any final thoughts on Bitcoin's move, its kind of march towards gold from you?
A decade tops. That's my take. I mean, I think that's very doable, especially like I was saying in the very beginning of the show, if we do have nation states all starting to pile in. I think Putin's message yesterday can't be understated because of just the whole BRICS thing. If they kind of start collaboratively adopting Bitcoin, how fast does that become? It's kind of what every Bitcoin maxi has dreamed about, this whole hyper Bitcoinization, where it becomes sort of a de facto standard. So, but I still think it's going to take time. Volatility is going to smoothen out, the assets continuing to mature. So I think by 2035, I could see a $1 million Bitcoin or whatever to surpass gold.
Okay. Pretty exciting stuff, guys. As always, this was a super interesting conversation. Thank you so much to Funky for contributing, Stats for being with us, and Sammy, as always, for providing all of the insight that we deliver every single day. Just a reminder, we do this every single day, Monday to Friday at 7 a.m. Eastern time for 1 hour. We're live on X video, and on YouTube, and also Apple and Spotify podcasts if you want to consume your media over there. That's it for today. We'll be back with you tomorrow. Have a wonderful day. Take care, and we will see you tomorrow. Bye-bye.